Very good evening, members. Is it audible? So, on behalf of Bangalore Banks, I welcome each and every one of you for today's technical session workshop on new simplified GST return formats under GST Law. So by end of the session, you will come to know whether these new formats are simplified for government or for taxpayers. So you will come to know. So I welcome each and every one of you on behalf of Bangalore Banks. Now I request our chairman, Sivaram Bhatt sir, to please escort today's technical session speaker, CA Venugopal. So before we start the session, a couple of announcements. So we have this week full of technical sessions lined up, including Independence Day celebration. So tomorrow we have study circle meet on practical aspects of internal audit, and Thursday 15th August Independence Day celebrations from 9 o'clock. Flag hoisting will be done by CA KS Madhavamurthy sir, past chairman of SIRC of ICAI, and there will be half-day seminar on CA practice development. So it will be very useful. And last but not the least, on Saturday we have one-day seminar on ICDS and changes in tax audit reporting. So where chief guest for the session is Honorable MP Tejasvi Surya. So I request each and every one of you to please register if you are not registered, and make use of the opportunity available. And before we commence the session, so small introduction about CA Venugopal sir, where he has taken so many seminars at Institute, our branch, where no introduction is required, but still for the sake of introduction and for the benefit of who have not seen, so we'll just introduce small introduction. CA Venugopal is partner in Messrs. Venu and Vinay Chartered Accountant, and qualified in the year 2002 by securing All India 45th rank. He is also Certified Information Systems Auditor. He has also completed various other certificate courses from ICAI, namely GISA, course on business valuation, course on internal audit, course on fraud detection and forensic accounting. He has also completed one-year course from IIM on data analysis and business intelligence. As I told, he is very active speaker at ICAI on GST, especially on technology and its implementation challenges. He has authored various industry-specific handbooks on GST and also contributed to technical guide on GST audit released by ICAI. He has conducted workshops on filing returns with ease use of automation. He has developed a lot of Excel-based free utilities on GST like JSON Reader, creating JSON files, GST Validator, composition versus regular benefit analysis, GST Impact Reader, real estate projects, switch decision analysis, GST audit working paper tool, etc. He is also a GST faculty at ICAI and conducted various workshops and webinars. He has been co-opted to Indirect Taxes Committee of ICAI. He is a core committee member of FKCCI GST Wing. He also advises on technology for GST implementation and integration of accounts and returns filing utilities. His other areas of practice include design and development of internal controls and process documentation, consulting in ERP implementation or migration, management consultancy for business analysis and growth and design of management information systems. Apart from audits, he has hands-on coding in VB, .NET or Python. He also reviewed database designs. He conducted various workshops for corporates on use of technology, improve efficiency at work using Excel, building automated reports from accounting and financial applications. He was behind in the development and managing of cloud applications like TaxMail, Insta Financials and others. So what not? So sir is sir has a very wide experience, and hope everyone will enjoy the session. So we welcome you, sir. Thank you so much for the session, and session is yours.
Welcome everybody, and thank you for your kind introduction. And good to see a lot of members whom I know. And it's 5 o'clock. We have session till 8:30. General practice, okay. We will get to know the time at 7 o'clock, okay, when do we leave. But thankfully today's topic is something, okay, I wish if I can complete in time. And that is where I mentioned as okay, basics of new returns, because I'm not sure how much deep we can get into, because it's completely a new subject for many of us. Yeah. And I also congratulate Chairman Sir for taking new initiatives and bringing out new different topics and new different sessions. Okay, with this brief words, let me start the session of the day, which is new simplified returns. And as Phanindra was mentioning, it is simplified for the taxpayers or for government. Days to come, it has to expand. May I know how many of you have gone through the new formats, RET1, ANX1, ANX2? How many of you are conversant with the new returns? Can I know by show of hands? Okay. Alright. And how many of you are conversant with the old written formats? GSTR 1, 3B, 2A? Okay, I can safely make an assumption that okay, you are pretty well aware of the old returns. Okay. And these new written formats are just around. By the way, why do we still say proposed written formats? Because these haven't been notified yet. There is no notification which has been released that okay, this is going to be your new returns. It's still proposed. There are no rules around it. There is no notification. Even the forms which we are seeing are still draft forms. These are not the final forms. By saying so, am I saying that it is going to be corrected? Very unlikely. Any correction which needs that okay, it has to get the blessings of the council, then the TRU should redesign it, it has to go to GSTN for implementation, etc. And we know again when it goes back to the drawing board for implementation, next 1 year, because again GSTN has to develop the software and redesign, test it, implement. So the strength of chain is always tested with the weakest. Very weak chain determines how fast we can test that. Likewise, generally in the GST returns, if there are some 20-30 branches to be consolidated and filed, the branch which sends the data at the last will decide when the returns for the state gets filed. Right? So there are a lot of challenges which we had in the old returns. Coming to the new returns, would these challenges be addressed? Would they become multifold? Is what we have to look at it. Given that not many are conversant with the new returns, I will not get into the in-depth discussions or complicated issues, because then it would be completely overboard and you will be really looking for when it will be 7:30, 8 o'clock. So we will get an overview of the returns, understand the transition dates and its implication. When we say transition, what does it really mean? We should definitely know. The monthly returns plus annexures and the quarterly filers, whatever the quarterly returns plus annexures. So we'll get an overview perspective of all the returns. Yeah. Firstly, the new returns is not just a set of return, one return which for us to understand. Currently, what are the returns we are filing? GSTR 1, GSTR 3B. 2A, okay, we don't file. It lands into our kitty and we have to accept as such. So I can say that GSTR 1 and 3B is what we are filing. So in today's discussion, we would restrict our discussion only to the regular returns, not the composition and any other returns. So basic regular dealer who was erstwhile filing GSTR 1 and 3B, what is it going to be changed is what we will be looking at. So if I have to go to the history as to what happened, what is the genesis of the new returns. In the month of July 2017, fag end of July 2017, where the GSTR 1 was released and said, okay, this is up for filing. And in August, GSTR 2 was also released and it said it is up for filing. People struggled and the due dates got extended. This extension went till December. Eventually, government scrapped, saying that let us suspend GSTR 2 and 3 for the time being. And it got suspended because of two reasons. A, users were not ready in filling and filing of the form. B, technical glitches, system was not ready. Like GSTR 2, with a great difficulty for the month of July and August, some of them have attempted and filed, but GSTR 3 system was not ready and it was failed. So given that it failed, government went back to the drawing board. It went to again TRU, the tax research unit, and they said, okay, what could be simplified form with which we can go back and bring GSTR 1 to 3. The crux of the GST is matching, and the recent CAG report, which got released, roughly 400 odd pages, 26 pages, revolved around why the input tax credit matching did not happen, how it has created some fraud or revenue leakage. And when GST was introduced, it was said as a technology based law, and it is definitely going to be a simple law, but a very much revolving around technology. And they said every invoice should get matched, only then the credit should be allowed. So the concept, the core concept of GST was matching. And that is where when GSTR 1, 2, 3 failed, they went back and said, let us bring a simplified returns. In the month of May, the GSTN Council said, okay, we have got the simplified return formats and we are going to consider the new simplified formats. They have approved it. In July, it has been released for the public for the comments. It was there into public domain for comments till August. Various stakeholders, including ICA, has given their comments about the draft simplified returns which were there in the public domain. All the drafts were considered and the government went back, made a minor tweaking of those forms. In the month of Jan, they said the forms are ready, went back to the council. In the month of March 2019, the council has approved the new formats. So the current formats, what we are seeing is the March 2019 format, and which has been given to GSTN Council also parallelly for developing. And GSTN Council, GSTN has released a beta version of it for the people to use it in the month of May. And owing to elections, there were 2 months we did not have any council meetings, and no dates were no dates of implementation was done. And the speculations were there that okay, we will have 6 months window for testing and etc. And the press release was released in the month of June, stating that the new returns would go live, and it would go live from the month of October. So we are already in August, and in 2 months from now we are going to see the new returns. In the government portal, GSTN, once you log in, you will also be able to see the beta version of the new returns, where you can do some data entry, test how those values are coming up. Yeah, those are the broad journey. So what is the government has done to ease of the load, to ensure the returns are definitely, technology glitch doesn't happen. So at their end, they looked at let there not be a technology glitch, and they segregated the filers into 2 categories, quarterly filers and the monthly filers. Quarterly filers they called as small taxpayers who will be filing the returns by 25th, and the monthly filers are called large taxpayers who will be filing their returns by 20th of every month. So there has been split of the load, and the government said that let us ensure that there is no technology glitches. Now The first problem which was there in GSTR 1, 2, 3, the technology glitch, load on the system. Every month on 20th, you will see on the WhatsApp groups, okay, is this GSTN server working for you? As if it's like there is a private channel for each other. And when you log in, it says, okay, 1,50,000 users are already in the queue, please wait. Right? So all those issues they are now trying to resolve. And the filing of a return is always monthly. Do we have a quarterly filing in the current regime? The regime of GSTR 1, 2, 3 or 3B? Do we have a quarterly filing? Yeah, GSTR 1 we were filing quarterly, but unfortunately GSTR 1 is not a return. Though there is a word called GSTR, but it is not a return, it is still a statement. And GSTR 3B is a return definitely, and that return is still filed monthly. Filing of returns on a quarterly basis as a concept itself is not there in the Act. So the amended Act 2018 in the February, they amended section 39 saying that the government has powers to allow returns to be filed on a quarterly basis too. So section 39 has been amended to allow the returns to get filed on a quarterly basis, and that is where we got the quarterly filers coming in. In the earlier we were only filing GSTR 1 on a quarterly basis, but GSTR 3B continued to be filed on a monthly basis, yes or no?
Yes.
So you have always been filing returns on a monthly basis and not on a quarterly basis. So the load has been now split. There is a quarterly filing and monthly filing. And government believes 74% of the filers opt for a quarterly filing and based on their data. So what is the segregation currently? GSTR 1 has divided between quarterly and monthly. Turnover have the SSCs who is having a turnover of 1.5 crores, and in the new returns they have considered increased this limit to 5 crores. So the previous financial year, if the turnover is less than 5 crores, then one can opt for the quarterly filing. Please note it is a turnover in the previous financial year. So current year my turnover is 1 crore and the previous year my turnover is 10 crores. I would still have to file a monthly returns. And vice versa, current year it is 10 crores and the previous year 1 crore. System will allow me to choose for a quarterly filing. And someone who is registering afresh, since there is no record set of the previous data, at the beginning of the filing, they can still choose quarterly or monthly. And is it mandatory? Monthly filing is definitely mandatory who are ever into monthly filing. People who have to do a quarterly filing, they can always choose from a quarterly filing to a monthly filing. And this choice, there are various types of the returns. So the choice of choosing a return is very essential. The first return which you are going to file, system would ask you what type of return you would want to file. And basis that your profile is set, basis that the rest of the tables, the type of formats, returns, everything is auto-populated. Yeah? Any doubts so far? Yes. Turnover would be pan-India basis. It is aggregate turnover as defined under 2 subsection 6. Alright. Quarterly filers again further categorized. They are not just one category. So the turnover up to 5 crores in the previous financial year, which is 2018-19. So we are in 19-20. The turnover in the 18-19 is treated as quarterly filers, and all other tax filers would be treated as large taxpayers. Quarterly filers are further categorized into 3 categories. The 3 categories: 1, a very small tax filers. They are called, so we have borrowed the names of erstwhile income tax returns. So one is called Sahaj, and their return name is RDT2. So Sahaj means those who are making supplies only to B2C. So that's a one quarterly filer. Then there is a second category of a quarterly filer who is Sugam. So who is making a supply both to B2C and B2B. So their form, their return which they will be filing is RET3. Now there would be a quarterly filers whose turnover is less than 5 crores, but yet they carry exports, they do all types of transactions which can be envisaged under GST. So for them the return they would be filing is RET1. So there are only 3 returns for the regular taxpayers: RET1, RET2 and RET3. RET1 is something which has all the options. You can choose to file all types of returns, that is RET1. RET2 is a very small taxpayers who are dealing only for B2C. This is also called as Sahaj. RET3 is B2B and B2C, a small taxpayers. It is also called as Sugam. The table numbers, everything is of same. There is nothing much to know. But yes, these terminologies, these words would be coming up. And while choosing your returns, at the first return when you are filing, you have to choose which return you would want to file. Now, why is it essential for you to choose which return you want to file? Because once you have chosen a return, you cannot downgrade yourself. Government wants you to do more business and upgrade. After you are choosing a monthly return, you cannot go to quarterly return. After you choosing quarterly return RET1, you cannot go to Sahaj Sugam. You can come back, you can upgrade yourself. I am at Sahaj, I can move to Sugam. From Sugam, I can move to RET1. From RET1 quarterly, I can move to RET1 monthly. So having chosen an option, going downward is difficult, but you can upgrade yourself to the next available format. Again, beginning next year, you will have this option of choosing what type of return you would want to file. You can choose it. So choosing the return wisely at the beginning of the starting of the filings is very important, and it would be applicable both for the small taxpayers and the large taxpayers. So coming the September return, you would choose yourself whether you would want to be in a small taxpayer or a large taxpayer. Currently your turnover might be more than 1.5 crores and you are filing GSTR1 on a monthly basis, but it might be less than 5 crores and you might want to choose to file on a quarterly basis. So the option for choosing quarterly and monthly is available for all taxpayers. So the September month returns, till September you would be filing the old returns. Coming this October, you would have this journey of the new returns. Let's look at what is the journey of the new returns. Up until September, absolutely no issue, you would be filing GSTR1 and 3B. Come October, all small taxpayers would get migrated to a new return platform. All small taxpayers. So those who are opting for filing on a quarterly basis. So their quarter starts from October, November and December. This quarter you would be filing in the month of January. You will be filing the new return. Maybe RET1, RET2, RET3, whatever be the return, you will be filing in the month of January for the October to December. When it comes to the large taxpayers have been again given a phased implementation. The phased implementation is in the month of October and November, GSTR1 would be replaced with ANX1 and you would continue to file your monthly return GSTR3B. Come December, even this 3B would replace with RET1. So you would have a new return coming in for the large taxpayer from the month of December. October, November you would be filing ANX1. In the month of December, you would be filing ANX1 and RET1. October and November it is ANX1 and R1. December it is ANX1 and RET1. But for small taxpayers, they are migrating directly from October itself. So October, November, December, the return which is getting filed in the month of January, you will be filing the altogether new return. So this is the transition which has been envisaged and it is going to be implemented. Any doubts, any clarity at this point?
All outward supply.
RET1, RET2, RET3. So small taxpayers would have RET1, RET2, RET3. Can you see the quarterly taxpayers? Okay, so it is, it's not in the column of November, actually it was center aligned, it should have been, it was for the period October, November, December. It is not when you are filing, the period for which you are filing. So the October, November, December, it would be RET1, one return for the quarter.
ANX1 needs to be filed again. All.
ANX1, it would be, system would be generated again at the end of, you can continuous, so they have brought in an option of continuous upload. You can choose to upload and file it later. Now, sir has a question that, okay, should ANX1 be filed in the month of October, November, December, even for the small taxpayers? One good news, there is no concept of filing ANX1. So, no one would be filing ANX1, whether it is small taxpayers or a large taxpayers. If I have to simplify and explain the return, the new return, currently we are filing my GSTR1 on 10th, or which is now 11th, and on 20th I am filing my GSTR3B. Are they correlated? Are they interconnected? Is 1 and 3B, is it interconnected and correlated? Yes or no?
No.
Okay, how many says?
After that you get a notice.
After that I get a notice here, that's okay. But are they linked? 1 and 3B?
No.
I can file whatever I want to file in 1 and I can file whatever I want to file in 3B, right? Of course I should match both and file it. They are not interconnected. Where do my credits pop up? Where do my credits show up? GSTR 2A. Is my GSTR 2A and 3B interconnected? No. I choose credits what I want to take. I pay tax on whatever I want to pay tax on. So my 3B is independent of the liability that I disclose in GSTR1. Yes or no?
Yes.
My 3B again independent of credit that is showing up in my 2A. Yeah? So for how many of you have GSTR 1, 3B and 2A? Forget 17, 18, 18, 19, at least in 19, 20 financial year. All these three match. Anyone like that? Don't include nil returns.
Personal return it matters.
Personal return it matches. So out of how many returns we file? Yeah. So it's definitely there are a lot of things undergo changes in the books. Even books doesn't get closed. If the books gets closed month, on 20th of April we should be ready for tax audit. 1 is done, 3B is done, input is matched, sales is matched. So there is no reason why we should wait till October due date for filing the returns. Is it due date September or October? So we always file on the last date because books gets finalized on the last date, and when you are finalizing books on the last date, some entries are coming in, whether accrual income, whatever the name you would want to call it. So your 1, 3B, 2A is non-matching. So then non-matching means it's a good job for the accountants. So definitely you need 1 or 2 persons who will reconcile, report, adjust, correct, all that. The government said it is even more challenging for them. Government also said in their recent thing, only 67% of the times both 1 and 3B match at various intervals, but any given point of time both do not match. And they have bigger issues in IGST settlement account because in 1 I disclose my liability under different states IGST I need to pay, and when it comes to 3B I disclose my 3B in table 3.1a, so much IGST needs to be paid, but against which state that I am paying I do not further give a split into the subsequent tables. And that's where they brought in the circular saying that if you do not fill in all the required details, there would be a penalty of 25,000 that would be levied. Many of us do not divide though. So in the new returns they said I think we should address this issue. Now what did they say? If I have to capsulize or put it in the new returns into a very simple form, your GSTR1 you have anyhow filed. The liability in GSTR 3B, let us freeze it based on your GSTR 1 data. So whatever the liability you are disclosing in R1 on 11th, consider it is auto-filled and auto-populated into table 3 of GSTR 3B. Your GSTR 2A also has a counterparty filings. The credits which are there in 2A, let us also autofill in my GSTR 3B table 4. My liability is auto-populated, my credits are auto-populated. So the net tax payable would automatically get calculated, and we have new section 49 amended rule 88, how to offset the credits. So system will offset the credits, and whatever the cash balance which is there, it will offset and say so much needs to be filed, and you just say submit and file the returns. Isn't it simplified? So you do nothing. How if we under new regime, if you have to file your monthly return, you will select that button called return, you will open, first page auto-populated, you will click next, second page auto-populated, you will click next, third page it is submit, you will click submit. So new return concept, filing of returns is next, next, submit. Trust me, new returns, in the returns you do not have any data entry. There is small leeway, so some adjustments which I will come to the exception. But entire returns are auto-populated. Both your liability is auto-populated, credits are also auto-populated. So what do we do in the returns? Next, next, submit. Return filing means next, next, submit. So the data for next, next, submit, GSTR1 is now replaced with ANX1. Whatever you enter in ANX1 will become the liability. GSTR2A has become ANX2. Whatever is there in your ANX2 has become a credit. So your liability has come from ANX1, your credits have come from ANX2. So the liability, please come. The liability and the credits are auto-populated, return is auto-populated. Here comes one small thing which you should know. Since the credits and the liability are flowing from ANX1, so you can continuously keep entering the data in ANX1. Whenever you file your return, it is like you have filed your ANX1 and ANX2. So there is no concept as such filing of ANX1 which was there in GSTR1. Like in GSTR1, you have to file a statement, but under new returns, there is only one return and two statements which are annexures to the returns. Imagine a spreadsheet, like you have a return in the first sheet, annexure 1 in second sheet, annexure 2 in the third sheet. Whatever the data in annexure 1 goes to your the first sheet, annexure 2 is also going to the first sheet. What you are submitting is this Excel file. So as you file your return, it is deemed you have filed your ANX1 and ANX2. So there is per se no separate filing of ANX1. You will only enter the data, you will save the data. That saved data is auto-reported into your RET1. Once you file your RET1, ANX1 for that month is deemed filed. Yeah? Is that clear, sir? Everybody? Yeah? Any doubts on this proposed concept?
Due date for ANX1?
Will there be a due date for ANX1?
Quarterly filing return only good.
So can there be a due date for ANX1?
No. Data filing.
So date of filing of your return would be the date of filing of ANX1. So there will not be any due date for ANX1. So we will still have to await for the rules. And so no late fees for like GSTR1, if you file late, there is a late fee. ANX1, hopefully there wouldn't be any late fees because there is a no return that you need to file.
But PMT, payment, how do you make?
I'll come to, let's first get this. PMT is in at least some 30 slides far. ANX1 and RET1, are we clear on this? Yeah? Okay. So, how did the system now changed from GSTR 1 to 3 to the new returns? What was GSTR 1 to 3? I file my GSTR1 by 10th of the month, so all the outward supply, so in the subsequent month by 10th I submit. Whatever I have entered in GSTR1 is visible to the recipient in a real-time basis in an auto-populated statement called 2A. Whatever the data which is there in 2A, I consume between 11th to 15th with an option for me to accept, reject, modify, add. So I have all these additional options of accepting a record, rejecting it, adding it, editing it. So I had this option. If I am making any corrections to my GSTR2, these corrections would be reflected to the supplier in their GSTR1A. Between 16 and 17, the supplier would have to take action on them whether to accept or reject these changes. Basis my 1 and 2 and 1A adjustments. If 1A is corrected, it is deemed 1 is corrected. Basis this, on 20th of a month I have to file my GSTR3 by making payment of the taxes. This was the original format or the original scenario which has been envisaged. This has now been changed with my ANX1, ANX2 and RET1. How is it changed? I will do a continuous upload of my liabilities, and the option for continuous upload continues for even the quarterly filers. Till 17th of the month I will be keep on uploading the data. Again, they have made sure that the system is not loaded with too much of the traffic on 18, 19, 20th. So till 17th I will keep on entering the data in my ANX1. Basis my credits which are there in ANX2. They said cutoff date for ANX2 is 10th. Basis this ANX1, ANX2, the data is auto-populated in my RET1 and minor option for making some adjustments, and I file my RET1. So the new written format, I enter data in ANX1, ANX2 is auto-populated and RET1 is what I would be filing. This is the new process which has been envisaged. The dates and cutoff dates are very important, because since the data is completely auto-populated, imagine I am the accountant and if my 2 credits are auto-populated, 1 liabilities are auto-populated. Now I look at I log into the portal, see how many credits have come, what is my liability, I calculate what is the net amount of taxes to be paid, I prepare a check, I go to my boss for approval, and before he signing the check and he logs into the portal, he suddenly sees a different credits or different liability, because this is a data which is continuously getting uploaded. So the government said, since the data keep on changing, let us freeze the credits on 10th. So whomsoever who have uploaded the data in ANX1 up to 10th would be a credit for you. What happens to the data which is uploaded after 10th? Not that it is not a credit for you, it is a credit for you in the next month. So up to 10th is a credit for you, and given that they have taken out something, they gave one bonanza and bonus saying that even though you have not received goods or services in the previous month, but you have a line item which is there in ANX2. So someone has uploaded, you have a line item, and you have received the goods or services on or before filing of your return, you can take that credit also. Section 16 did not, one of the condition under section 16.2 to take the credit is receipt of goods or services. But however, the section 16 has been amended with the new Amendment Act, and they said they brought in a new section 43A which also now gives a provision that let the recipient be taking credit if the item, the line item is visible in their ANX2 and the credits have, the goods and services have been received on or before filing the return, even that they are eligible to take a credit. In a blanket way saying, whatever the line items you can see in your ANX2, you are eligible to take the credit. Yes, sir.
So this all liabilities continuous upload till 17, pertaining to the previous month or current month?
Okay, so is this continuous upload is pertaining to the previous month or current month? In a way, I would say that you can keep on uploading it. If you are entering an upload of any turnover of the current month, it would be reported in your current month ANX 1. So you have ANX 1 on a monthly basis. Now generally we are in the month of August. We enter our liability in the month of my July ANX 1. In my July ANX 1 is generally I enter. Can I enter a sales transaction of 2nd August in my July ANX 1? No. It would obviously have to go to August ANX 1. Can I enter a April, May, June transaction in July ANX 1?
Yes.
Answer is yes. So up until that month, whatever is the transaction which I have to report, I can report in that month. Yeah. So the filing month is different, the tax period is different, the month in which you will file is also different. Yeah. So we have to be very careful with these dates, because in the end, based on your understanding, we will have a small FAQ, a question and answers, for me to assess that how much you have understood. Yeah. This is the proposed concept or the new written format. Is this clear? Any doubts for anyone? I'm happy, there are no doubts. So what has been proposed? A format of written equivalent to 3B, which is now called RET 1, 2 and 3. It could be a quarterly filing or a monthly filing. Monthly filing means turnover in my previous financial year is more than 5 crores and the format is RET 1. Quarterly filing is an optional. Optional means that you can file quarterly or monthly. It doesn't mean that you need not file the return. So what is the quarterly filers? If they are doing B2C, if they are very small dealers, then it is called Sahaj RET 2. If they are doing B2C plus B2B, then it is Sugam RET 3. If they have all kind of transactions, then they will also file RET 1, but on a quarterly basis and not on a monthly basis. Any clarifications?
Written 1 and 3 both look similar.
Written 1 and 3 both look similar. No, it is okay. There are many type of transactions other than B2B, B2C. Can you name them? Exports, SCZ supplies, deemed exports. So there are other transactions which gets in. So those transactions can get in through RET 1 and not RET 3. Yeah.
So once somebody does one transaction for export, he is going to quarterly return 1.
Yeah. So if I have chosen Sahaj, a small taxpayer B2C. The moment I make a B2B supply, then I have to move to next return Sugam. If I do an export, then I have to move to the next return monthly RET 1, right? So I have to choose based on my transactions. But after choosing my, say from Sahaj to Sugam or Sugam to the quarterly, I cannot next month say I will come back to the smaller return. So once you have filed an upper return, you will only go to the one level above. You will not come to one level below. So choosing of what return you want to file at the beginning of the period is very critical, because you cannot scale yourself down. So they gave the options for scaling down and upward. Can you give an information? So here is a comparative slide, what you can do, what you cannot do. If you have B2C supplies, you can use all the returns. If you have B2B supplies, then you cannot use Sahaj, you can use Sugam. If you have export, then you cannot even use Sahaj and Sugam. And if you have a non-taxable turnover, reporting of non-taxable turnover is there only in the monthly returns. It doesn't mean that the small taxpayer need not have a non-taxable turnover. The reporting of non-taxable turnover is also optional for RET 2 and RET 3. There is no facility to report, and they have explicitly said that you need not report. But if some choose to want to report the non-taxable turnover also, then they have to use RET1 and they cannot use RET2 and RET3. And if you have notes, please make notes of it. Trust me, you will not remember all this as we move. I'm just in the beginning phase, and when we get into the forms, there are a lot other things to discuss. They have also given an option of filing nil returns and nil returns through SMS. Like today, we book gas cylinder over the phone, and today we do e-way bill by sending one SMS. They said, let's file the returns also through SMS. If your returns are nil, just send one SMS to one number, your returns get filed. So what does nil means? Nil means everything is like no inward, no outward. You shouldn't have any supplies. So that is what nil. So here is the first step for migration. In the month of October, when you log in to file your returns, so your returns dashboard will ask this first question. Your first question is, in your previous financial year, is the turnover more than 5 crores? If your answer is yes, then okay. If the answer is no, then would you want to file your returns on a quarterly basis? Again, if you say yes, I would want to file the returns on a quarterly basis, then there is a next set of question which will come is, would you want Sahaj, Sugam or normal? So this is the first step for every taxpayer. Whether they are large, whether they are small, you have to set your return filing for the previous financial year. Basis that the current financial year return filing gets set. Yeah?
Here if someone who is eligible for quarterly, if he wants to do monthly, then we should select turnover is less than 5 crores for me.
Yeah, so here you
Wrong declaration.
Yeah, you can set your turnover is less than this, and after you log in, you can further upgrade from quarterly. So
quarterly to monthly.
yeah, you can any given point of time from quarterly to monthly, you can set your profile to upgrade your profile. So you will choose previous turnover is less than this, and you will set to quarterly RET1. You do not want a quarterly RET1. In the next session, you will upgrade the return file from the quarterly to monthly.
There will be option.
Yeah.
But present there is no such option.
The
Quarterly to monthly.
No, there is an option. You have from monthly you cannot go to quarterly, but from quarterly you will come to monthly.
At present also it is there.
At present, these forms have not come. So
Previous version, GST 1 quarterly to monthly. So only during April it will last.
correct.
So at that time,
Here under the new returns, this migration will happen any time. So you filed quarterly returns say for first 2 quarters. Third quarter onwards, from the beginning you can choose to go on a monthly basis. So it is not that you will set at the upgradation anytime during the year. You want to go to a lower scale, again you have to wait for the next year. Only at the beginning of the next year you will set yourself as to what is the type of return you would want to choose.
So this is the actual screen which are going to come? Or
Is this the actual screen which this is going to come? Kind of, yes. Currently in the beta version, the form is there.
so not everybody will be very aware of Sahaj and Sugam.
Yeah, but maybe these are the words only you would see. Is this
Because they could
the...
have said the B2B, B2C, B2B like that. I think that is more comprehensive.
Yeah, very good thing. Maybe one should write to GST and saying that do not use the word Sahaj and Sugam.
They can
Change
use,
it.
but additionally,
Add additional thing. Yeah, but at this point, this is how it would look like. So the period, if you haven't chosen anything, see, there are filers who are now filing their GST 1 and 3B for the month of July 2017. Alright, so don't get surprised because they have to file annual return and other things. Now they wake up, yes, okay, I did not have money at that time. I didn't know that something like this to be filed. I thought yearly once I have to file. They have all the reasons, whatever they would want to justify why they have not filed. Likewise, even the new returns doesn't mean that in the month of October everyone will log in and set their profile as quarterly, monthly, optional. System has to move on. Engine has to be set. because you haven't chosen any profile and I am making a supply to you and I will report my returns in my data in my ANX1. It should get populated to your ANX2 and other liability calculations. So what the system they have done is they have made a set default settings to everyone as monthly. So if the moment you log in, this page is set by default. You do nothing by default. This generally we got a habit. Whenever something pops up, either we close it or we give next. We have very less to immunity to read, understand, spend some time or waste some time, right? Likewise, you do nothing, you would automatically move to a monthly return filers. And that is where they also said that okay, maybe you might have erroneously skipped. So first time they said okay, after you set your profile, before you file your returns, you do nothing. I will give one option to swap from monthly RAT1 to quarterly RAT1 or a quarterly RAT1 to quarterly RAT2 RAT3. Before you file the return, you may have erroneously set your profile. I will allow you to reset and do it. But you got to be very careful. Once you have chosen it and file your returns, you can only move to one level above, but you cannot come one level below. And as I said, new registered taxpayer turnover in the previous year is not there. So you will have an option to file either monthly or a quarterly. The periodicity of the returns will remain unchanged during the next financial year unless before again filing of the next financial year. So beginning of the next financial year only you will be doing. A very important thing, there is a concept of missing credits. This missing credits cannot be availed. So suo motu, you cannot take a credit which is missing in your Sahaj and Sugam. As I said, your GSTR 3B, the credits are auto-populated with your GSTR 2A, which is otherwise now ANX2. But what happens if a supplier is not reporting? Generally in my 3B, I report my credit based on whatever is there in my books of accounts. I give a less importance or a less care whether 2A if it appears or not. Like it is not my responsibility, my headache. It is the supplier's duty to file the returns, right? This missing credit is like we have been already taking in my GSTR 3B. But under the new returns, concept of missing credit exists, but this missing credit is not there for quarterly filers. So one should very well know that if you are also opting, when I am saying quarterly filers, Sahaj and Sugam, if you are opting for Sahaj and Sugam, whatever is visible in your GSTR 2A is only your credit. You cannot report or take an additional credit which is not there in your ANX2. There is a very important concept, important change. You should be very well aware. So in my personal opinion, in my personal view, if I have to file, I will not choose RET2, RET3, I will directly choose RET1 quarterly. And my clients, I would definitely recommend, I will say file RET1 monthly. Who will remember this multiple due date, 17th, 20th, 23rd, 25th? Let us have one uniform date. Like even now GSTR 3B, you are anyhow filing on a monthly basis, which means you already know your liability. Without knowing my liability, so I cannot definitely not freeze my credit, my GSTR 3B. Having known my liability, better to file GSTR 1 and discharge the liabilities, right? So it's again personal individual call. And government, according to the government data, 73% of the filers fit under the quarterly filing regime under the new concept. Yeah? Yes, ma'am.
So what is the intention of the lawmakers by not giving the credits and utilities?
What is the intention of the lawmakers? Definitely I don't know, but they do not want, they want into autopilot mode. Even this missing tax credits in the original format, draft format of the returns which came in the month of August, they said it is having a shelf life of 6 months. Even for a monthly filers, they said only for the first 6 months we will give the option of reporting missing tax credits. But under the new returns which came in based on various recommendations, they removed that word 6 months. They said, okay, let us see how it will go through. Maybe in a year or two they may say even for the monthly filers you have to take credit whatever is appearing in 2A and not beyond that. So that would be the intention of the law. So swap from one return to another. RET1 monthly, you cannot go to quarterly, you cannot go to Sahaj, you cannot go to Sugam. Quarterly RET1, you have first time switch between Sahaj and Sugam. Once you will be given a choice, maybe because you might have erroneously ticked it. You are in Sugam, which is B2C, B2B. You cannot go to Sahaj, you cannot come down, but you can upgrade yourself to monthly or quarterly RET1. When you are in Sahaj, there is nothing, nowhere else to move. So you can upgrade to Sugam, quarterly RET1, monthly RET1. Anytime you want to switch, you can switch. So first quarter you can do in Sahaj, second quarter you can do Sugam, third quarter you can do RET1, fourth quarter monthly RET1. You can experiment and do all the returns. The system will not stop you to upgrade to the next level of the return filing formats.
But if you already charged somebody some B2B transaction, you cannot go to Sahaj first time also.
Exactly. So if you the moment you're in Sugam and you suddenly realize you did a B2B, in the first quarter itself from Sahaj you will move to Sugam. Yeah. So let's understand the concept of the return filings. So before we get on to tea break, we'll first get an overview of the sense of the return. So we'll spend next half an hour in understanding the return concept. Then we'll get into the returns and get into the detailed mechanisms of it. What is the overall process which they have defined as? They said there would be a continuous upload of supplies. Now I'm not sure how many will exercise this. As and when you enter a sales invoice in your accounting software, if your accounting software is capable of uploading that data to the government portal, you can upload the data to the government portal. It will be saved in your ANX1. It will automatically get saved in your ANX1. So you can continuously upload your invoices. There is nothing due date saying that okay, you upload everything on this date only.
Except for 17th to 20th.
Yeah. So you will keep on uploading the invoices. The window for 17th to 20th is blocked. 18th to 20th is blocked. Up to 17th you can do the data entry. Whatever you are doing the data entry in ANX1 is on a real-time basis or a near real-time basis is available to the recipient in the viewing facility which is called ANX2. So whatever it is entered, it is available to view in ANX2. So ANX1 is your upload, ANX2 all your suppliers who are uploading is available to view, which is again inward counter. There is a facility to lock an invoice. Under the new return system, you will keep hearing this word called locking. A recipient can select an invoice and say accept or lock. Once an invoice is locked, supplier cannot change, edit, modify, amend, he can do nothing with it. So as a recipient, your credit is restored, is assured, is like you have the credit. Supplier, whether or not he files the return, whether or not he pays the taxes, credit for recipient is ensured once a recipient is accepting an invoice. One of the condition under section 16 subsection 2 is input tax credit means it's a tax paid credit. Now even that again subject to section 43A now in the rule which would be coming. Whether the supplier hasn't paid the taxes also, if he is reporting in their ANX1 and you are accepting it, it is deemed your credit, except in those 4 situations which they said it would be a joint liability. If it is an accommodation transaction, supplier has become insolvent or the assets are shorter of their liability, or it is a fly-by-night operator. So, or in case of business who is closed down. So, in these cases, recipient is also liable for that liability, but otherwise, having declared something as the turnover and the liability, supplier is liable for that the amount which is declared, and recipient would get the credit. This is one change which has come in your new returns. So next to the moment it is appearing, you click on that accept, that credit is it is there with you. Basis this ANX1, ANX2, the liability is auto computed. Liability is auto computed. So when they say our liability is auto computed, credits are auto set off. Basis the cash balance, system will find out optimal utilization of cash balance and move it. In fact, in the amended rules, they have also brought in PMT09, where if you have a cash balance in one ledger, you can move from that ledger to any other ledger. A cross utilization of cash balance has also been brought in. So the liability is also frozen, credits are frozen, and you will file the returns. Now currently you do not know whether the supplier has filed it, not filed it, when they have filed it. When you download your GSTR 2A, there is something called counterparty filing status. Filed, not filed. You will be now knowing in your ANX2 whether whatever the returns or records which you are seeing, whether the counterparty has filed it or not filed their returns. If so, when they have filed their returns. Whatever is the date of uploading of the document and date of filing is also going to be available for the recipient to view. So if the recipient has a good accounting system, good practice, they themselves can start grading their suppliers as to when are they filing it. What is the time period at which they are uploading their details. So you will be seeing when is the sale date, that sale record when they have uploaded. So you will know the speed at which they are available, they are doing it. In fact, some softwares have come one step above, one step ahead. Since 10th is the cutoff date for my credits, on 9th itself you can download, check your ANX2 record, check with your purchase register. You can send a JSON file to your supplier saying that please upload this file, a credit will be visible to me automatically. Because it is a continuous upload, there is no necessity that you have to upload one JSON for a whole month. You can keep on uploading how many JSON files you would want to. So if I am the buyer, you are all the suppliers, on 9th of the month, my system can reconcile what are the credits which are missing. It will automatically send an email to you saying that okay, you have not uploaded these records, here is the JSON file, please log in and upload your JSON file, credit would automatically be visible to me. So the technology is now actually coming. In GST, we started becoming more tech oriented, and after the income tax we learned XML, now we learn JSON, and we know VLOOKUPs, pivots, matching, all those terminologies we are also using it. So how does this credits, the 10th concept comes in? Invoices uploaded by the supplier by 10th of the subsequent month. It would be posted in the returns of the same month of the recipient. Those which have been uploaded after 10th of the subsequent month, it would be posted in the subsequent month return. Like if we have to take a simple example, I am the supplier, I am uploading an invoice, so you are the buyer. I am uploading the invoice on 5th October. When I am uploading for 5th October, it is for the month of September. So I am uploading my September return ANX1 on 5th October. It would be available to you as a credit in the month of September itself. If I am uploading this record in my ANX1, if I am uploading it in my ANX1 on 11th of October, my due date of filing my RET1 is 20th. I am uploading on 11th. It would be available to you as a credit in the month of November or October? October, which is to be filed in November. Is that clear? Now what you should be careful of? What you should be watchful of?
Uploading the invoices.
Uploading the invoices by whom?
The supplier.
Supplier. Is it in your control?
No.
Definitely no. And when would they upload? And last date is 17. When would the credits come to you? Next month.
But we can add the missing credits if we have chosen the normal return RET1.
So madam is saying that we can add the missing invoices if we have chosen the RET1. Unfortunately, again government has brought in small mischief and played. They have amended 43 in the 43A subsection 4. They said this missing tax invoice cannot be whatever you would want. 20% only can be under missing tax category. So 80% should be there in a category which is appearing. So I will not give you a working capital benefit. Ensure your suppliers upload. Rules for the same haven't been notified, so I cannot comment on what this 20% means. 20% gross liability, net liability, appearing credits, and in which month it will get offset. So that is why I started the slide saying that this is a proposed return. You haven't got any rules or anything. So in the first month of transition, the biggest challenge would be everyone would be applying. It's like forget ANX1, GSTR1 in our mind it is there. Okay, 11th. So 11th I will upload my ANX1. So even if they upload on 11th, it is visible to your ANX2, but it is available in your next month. So you cannot get the input tax credit in the previous month. So you would have to put a working capital from your side for you to manage this credit for the first month. And again, quarterly filers, 1 quarter you might have to wait to get the credits. So because quarterly filers, they might also procure from other quarterly dealer who will do his filing only on 23rd or so. So they would have their challenge. Yeah. So this is one other thing you should be knowing. Yes, sir.
So when will this import will be captured in this system? My NX2, when will it come?
I am uploading now at 6:04, 56 seconds. It should be available to you at 6:04, 57 seconds.
No, import of goods, IGST.
I'll come to, when I come dealing with the returns, I will deal with the other transactions also. But look at generally because majority, 90% of our credits are the counterparty credits. I'll deal with RCM, import of goods, all those things separately. Yes.
What about block credits?
Yeah, so can you give me one example?
In ANX1, when they upload, there could be some block.
Can you give me one example of a blocked credit?
Purchase of
Motor vehicle.
motor.
I am Varun Motors. I am selling a car. Do I know whether it is a blocked credit for you or not? I don't know. Would system know whether it is blocked credit or not? Even it doesn't know. So what comes to your ANX2 is all the credits. You invert all your credits, then take next actions. Whether you want to keep, retain, reject, pending, all those things. So you will get all the credits in your ANX2. So it is even more essential in your accounting. You should capture all your input tax credit, whether eligible, not eligible. Then you have to take a call of ineligible credits and pass a monthly reversal of ineligible credits, proportion credits. All those entries have to be posted on a monthly basis. Is that clear, sir? Does it answer your question? Yeah. Everyone clear on the slide? So credits up to 10th only are your credits for this month, rest are all credits for the next month. Yes.
Present system.
1 second.
If supplier is filing quarterly return, then how I avail the credit? It will
Working capital.
My next month, 2, after maybe 2 months, 3 months. But today I am filing that return. How?
You only gave the answer. Supplier is filing quarterly. I am a recipient monthly. How will I avail the credit? Next quarter I will avail the credit.
So working capital will go for it.
So like you are upset next quarter till then 43 20% you can report these extra credits. And you will say, no sir, all my business is quarterly filed. They are filing, they are submitting the data and the NX1 is not prohibited. Return is filed on a quarterly basis. Nothing is stopping them to enter ANX1 on a monthly basis, daily basis. Yes, yes sir.
And now we are filing returns from first itself, starting. We don't wait till 20th and 15th. In the present system, we have to wait up to 10th, afterwards only we should start filing the returns.
In the present system, should we wait up to 10th? After answer is yes. Your RET1 you can file after the 10th because you will have the inward credits coming in. Now will the system allow you to file RET1 before? Maybe we have to wait. But generally ANX1 can be continuously uploaded. There is no due dates. The only currently in the official documents which we have, ANX2 data entry for a monthly filer is locked from 18, 19, 20. For a quarterly filer it is blocked for 23, 24, 25. These dates you can only file your regular returns. You cannot do ANX data entry. Yeah? Alright.
What happens if an outward supply invoice has been uploaded incorrectly? How can it be corrected, or in the same month, like on 1st of October, an invoice pertaining to September has been uploaded incorrectly, either incorrect GST number or the tax amount is incorrect. Can it be corrected, or you have to wait for the next month?
Okay, so the question is, I have entered the details and I have wrongly entered the details. I have made a supply to Fanindra, but while uploading I have chosen Madam's GST ID and I uploaded it. Ideally what should Madam do? Do not accept that return. But generally what is our practice? Select all, accept, next. Right? We do not have time to check. Intentionally, unintentionally it got locked. So the question is, how do I correct it? So that is where we have the concept of amendment returns, which I'll explain little later. But an invoice can be amended, invoice can be corrected. Now, in case of a B2B transaction, invoice can be corrected. So I have to go back to the madam and say, can you unlock that invoice? So the moment she unlocks, her credit will be reversed to that extent. Control will come back to me. I will amend the GST NID. It will then be visible in there, the recipient, the actual recipient too. What happens if I cannot trace? Issue a credit note. Because by habit they will select all and accept. They will select all and accept this credit note, and you raise an actual sales invoice to the party to whom you would want to raise. So, but an invoice is locked. If I am the supplier making a supply to invoice is locked, I cannot amend it, correct it, edit it, modify it. I can do nothing with it. For me to amend it, edit it, accept it, it should be in a rejected status or unlocked status. By default, everything will be there as unlocked. Every invoice is open. After 10th, you are filing your returns, by default it gets accepted. Only when you do not accept that record, only when you untick it, saying that okay, I do not know whose it is, then those invoices are available for me to modify, amend, correct it. When can I modify? How long I can modify? Till September of the next financial year or filing of my annual returns, whichever is earlier. So I have issued an invoice now in the month of October 2019, made disclosed in my ANX1. I can correct this even in the September 2020 ANX1 as long as you have not availed the credit on it, which means you have not locked the invoice. Is that clear? Right. So invoice which has been uploaded but the returns which have not been filed. So I said the credits are deemed. So even though I have reported my invoice in ANX1, I did not file my return. If I did not file the return, it is like I have not paid the taxes. Technically, you are not eligible for the credit. They said invoices uploaded, returns not filed by the supplier is deemed as a self-admitted liability. Recipient will be getting the credit automatically. Recovery of the dues, again there is a 3 months time period allowed for the supplier to make the payment of taxes generally in the law before they initiate any recovery proceedings, or otherwise those 5 cases, before cases which I said, then it would come to the recipient. Otherwise recipient credit is intact. What about the missing credits? Missing credits is like generally in GSTR 2 we had the concept of adding an invoice which is missing. But here I do not have an option of adding an invoice which is missing. So uploaded by the recipient is a facility given to upload by the recipient for an information. Under the earlier regime, I can directly take a credit by uploading a missing tax period information. Like in my GSTR 2, the action available between 11th to 15th is accept, modify, reject, keep pending, add a record. But under the new system, I will not do any addition. It's like my return is auto-populated with ANX2. So if something is missing, I cannot suo motu take a credit. But however, government has brought in a reporting facility. They brought in a reporting facility. Recipients can report the missing credits. They are only reporting, they are not availing. Availment is a different thing. So in a different place, I report these many suppliers have not uploaded the invoices. These invoices would be reflected in the suppliers portal. Even now, if you log into GSTR1, by default we do not see any headers. You will see uploaded by the recipient, uploaded by the taxpayer, you will see on the top of it. So the supplier would be able to see what are the invoices which are uploaded by the recipient. So there is a concept of uploaded by the recipient. It's just that they also made that it can be done only in T+2. Wait for another, from the tax period to another 2 months, wait for the 2 tax periods. If it is a quarterly filer, T+1, we allow that the other party to file it in that quarter, because you might be filing little early, they might be filing little late. Wait for the 2 months. Even after the 2 months, if the reporting do not happen, then you report that okay, these are the purchases I have made and the supplier has not uploaded. By reporting there, you are not getting the credit automatically. It is just an information you are reporting, because this you have to be very clearly, you should know. You may be thinking that I have reported there and the credit would come, because this reporting happens in a normal ANX1 in table 3L. But reporting is only an information and it is not a credit you are taking. Unlike the earlier regime, you enter a record, it will automatically come as a credit, but under the new returns, it will not come as a credit unless supplier accepts it as a liability. So a liability of the supplier can only be your credit. Whether or not supplier paid the taxes, it doesn't matter, but it can become a credit only if the supplier has accepted it as their liability. Is that clear? Alright.
Is there a time limit for them to accept once we upload?
Okay, question is there any time limit for them to accept? Is like the moment you upload, it is available in their ANX1. Now, unless they remove it from their ANX1, they cannot file their return. The month in which you have uploaded, in that month, their ANX1, it is auto-populated. ANX1 is part of their return. So, unless I clear out my ANX1, my return cannot go through. Which means the supplier has no choice other than accepting or rejecting it. The month in which he has to file the return, he has to accept or reject for it. Yeah? Okay. Now, So this missing tax invoice, I said you have to wait for the 2 tax periods. You cannot upload on 11th saying that okay, so many records are missing, credits are not available, I will upload. The answer is no. You have to wait for the 2 tax periods, 2 months after the due date. Then if it is not available, only then you can upload. Till that point, you cannot do the upload. And quarterly filers, they will have to report in the next quarter only. They have to wait for a quarter and report it. Supplier, if he accepts, system will calculate the interest by itself. Interest is auto-calculated by the system based on the time lag. So under the new return system, there is an auto-computation of the interest. If I am filing my invoices late, system would do an auto-computation and capture the liability. The liability is auto-calculated. So the flow of documents, the supplier is uploading a document. It could be invoice, debit note or a credit note. The another change which has happened is it is a continuous upload of a document, not an invoice. The document could be invoice, debit note or a credit note. Now the linking between a credit note and invoice in the reports has been gone away. The amended act said that one credit note can be issued for multiple invoices. There is no necessity that a credit note needs to be linked to one particular invoice. So in the new returns, you will just upload one credit note like an invoice. In GSTR1, when you are reporting a credit note, you should report it correlates to which invoice. But under the new returns, you will not have any correlation. Like you are uploading the invoices, you are uploading the credit notes, debit notes. So everything you are uploading as a document. And this document, once the supplier has accepted, it becomes a valid document. And if it is not uploaded, but supplier is reporting as a missing invoice, it will flow back to the supplier. If the recipient is adding as a missing invoice, it would flow back to the supplier. Supplier will still have to accept or reject. Once he has accepted, it would move to the happy path yes mode and it becomes a credit to the recipient. Otherwise, that document doesn't exist as a liability for the supplier. What are the action items for the recipient? Recipient, the action items are accept, reject, keep it pending. Accept, reject, keep it pending. In fact, there is one more action item which is do nothing. If you do nothing, it is deemed as you have accepted. So government also said that if I have to simplify and put why GSTR2 failed, I explained the technology glitches at that point. From the user perspective, why did it fail? GSTR1 has only 13 columns, but when it came to GSTR2, against each record you have an option, you have a mandatory action to take. Whether you want to take credit or not, you have to tick. If yes, how much you want to take the credit. After taking it, you have to segregate that credit into inputs, input services and capital goods. And at the end, you have to give HSN of the total input tax credit. These are the main 4 issues which became like a roadblock in finalization of GSTR2. They looked at that these are the issues and they removed all these 4 issues. In the new returns, they looked at that these are the reasons why GSTR2 failed. So all these 4 issues they have eliminated. How did they eliminate? They said you have a choice to accept. If you don't accept also, it's fine. It's like imagine that simple Excel sheet. Some data is automatically flowing into ANX2. ANX2 is linked into my RET1. The moment you file RET1, the data deemed ANX2 is also filed, which means deemed you have accepted all the credits. So the system will say that okay, you have accepted it. How much of it is inputs, capital goods, input services? They have given one data entry point in the RET1. Out of the total credit, how much of it is input services and capital goods? If you do nothing, deemed everything is inputs. How much of the credit against each invoice you have to record manually in your GSTR2? Now they said let's get away with entire credits as far as what happens to the block credit. Entire credits will move into your RET1 as your credits. So and very good thing, they have equally matched GSTR 3B table numbers and the RET1 table numbers for you to remember. In 4A, all the credits would be auto-populated. In 4B, you will reverse whatever the credits you feel that it is not belonging to you or it is not eligible, partially eligible for whatever the reason, you will remove the credits in 4B. So everything they have simplified and said that okay, the recipient should not be put to trouble while filing the return. So locking of invoices can be manually done. If you don't do, it is a deemed lock. You can mark an invoice as pending if you are receiving goods in installments, or you really do not know whether you vaguely know that this vendor, but you do not know whether it is your purchase, not your purchase. For some reason you want to mark it as pending, you can mark it as pending. If you feel that okay, this invoice is not yours, someone wrongfully has uploaded it, you can mark it as rejected. So you have an option to accept it, keep it pending and reject it. So again, the problem of GSTR2 adding an invoice has been eliminated. Editing, modifying an invoice has also been eliminated. They said let user not modify a record, not add a record. You cannot add a record in your ANX2. You cannot modify a record in ANX2. At max, you can accept ARP, accept, reject, pending. You do nothing, it is deemed as accepted. Is that clear? Yes.
For all ineligible credits, we have compulsory reduction.
No, you accept the credits.
So, accept the credit and we are not eligible.
And reverse the credit, don't reject the credit. See, if you reject the credit, it doesn't belong to you. You accept the credit and reverse the credit.
So this locking happens only at the time of filing if you are not locked it.
This locking happens only at the time of filing if you did not lock it. It is auto mode.
And again, purchase returns, reversal or input tax?
Purchase returns is also same. It will flow, a credit note will flow to your ANX2. It will automatically reduce your input tax credit for that month. If you do not have an input tax credit, it will automatically add it as a liability. And you can manually accept it, then your liability reduces. If you don't accept it, again it is deemed accepted. It is a document, it's an action on a document. Right?
No, suppose after filing RET1 we came to know that it is wrongly accepted.
Yeah, so I have accepted my ANX2 by filing RET1. I have accepted ANX2 by filing RET1. Then I realized that it is not a record of mine. They have given a facility to unlock a locked invoice. I as a recipient will unlock a locked invoice. The moment I unlock an invoice, my credit would be reduced because I have availed the credit. You might say, no, I have reversed it in 4B. It's like you have taken it into 4A, the credit would be reduced. It will be going back to the supplier for making modifications, corrections, and again it comes to my ANX2, whatever the modified corrections, etc. Then the concept of locking invoices uploaded by the supplier, it is locked by the recipient. Supplier cannot amend it. At max, he can only issue a credit note or a debit note. But receiver, if they are wrongly locked, they will give a facility to unlock. In the online itself, they will give a facility to unlock. The moment I unlock, the ITC would get reversed and reversed along with the interest. Whether or not you have availed or not, it will get unlocked with the interest. Amendment of the invoice. If the invoice is locked, amendment is not possible. If the invoice is not locked, then the supplier can make the amendment. As long as the invoice is not locked, the supplier can make the amendment of the invoices. Credit note adjustment. Again, it is the same. I as a supplier issuing a credit note to you, my liability gets reduced only when you accept the credit note and reduce the input tax credit. If you reject the credit note, then it becomes a liability to me. Recovery of the input tax credits. The default status of the input tax credit is always available. So whatever the input tax credit is, it is available. Font is small, people at the back, you may not get it, but just listen to me. If supplier is uploading in Annex 1, credit is there fully intact. But in these situations, if a taxpayer is missing, supplier is missing, fly-by-night operator, he has closed his business, he has become insolvent, inadequate transactions, inadequate assets and liability. It is a convenience transaction, just a bill trading. I just passed on the credits. In this fourth situation, even though it is there in your Annex 2, there is always chances the government will ask you to pay that money and not the supplier. So we have come to the end before we get into the transactions. The returns that get filed is Sahaj, the basic return RET2, Sugam RET3, which is B2C and B2B. All other transactions would be RET1. So with this we will take a break and we will come back and see how the monthly return filings happen, how Annex 1, Annex 2 and the RET1 filing happens, what are the tables, what information that needs to get in. So we'll take a 15 minutes break and we'll assemble back. Next submit is not simplifying the life. So before getting into the new returns, then I should really understand your perspective. Why do you say no? And that too unanimously no, not going to simplify the life.
Before 10 everything should be there.
I have to match all the credits. So there is a pressure on the accountant now. Earlier, whatever the credit is there, I would take someone at the year-end auditor, internal auditor, stat auditor, GST auditor, their headache to match the credits. Now it is my headache to match the credits, okay? Any other reason why you said the new returns are not really simple? Trust me, it is only next submit. I am not exaggerating. You open RET1, you have nothing to do. Annex 1 is populated, Annex 2 is auto-populated. What will you do? And next submit.
For companies, many ineligible credit will be there.
Many ineligible credit, because every credit is auto-populated, so I have a onerous job to see how much ineligible credit. Even there, you need not do a invoice-wise thing. In your books of accounts, you know how much is the credit to be reversed. Bulk, you will reverse that much credit.
The company is eligible ineligible itself is a big question.
That issue was there even in the earlier regime also. While 3B also, I have to choose what is eligible. So, how will the life in the new returns be?
How do you fight with the suppliers?
Huh?
Fight with the suppliers.
Fight with the suppliers
Fight with
on a monthly basis.
Fight with the clients.
Well, it's quarterly or monthly.
Yeah. So earlier we were doing a reconciliation of books versus 2A. Now we will start reconciling 2 versus books. You feel that both are one and the same? Definitely not, because earlier you are taking the credit, then seeing what is there, what is not there. But now you are getting the credit, then you are seeing what has come, what has not come. So the challenge of reconciling on a monthly basis is going to go up heavily, and it would put more job onto the accountant. And how can accountant escape from it? If the accounting is done in a good practice, every accounting software has a set rules to record those entries. If they have done properly, technology is there, system is there to take care of the reconciliation. Government also realized that this is going to become an issue. They brought in a concept of offline IT tools. It is currently available, where the Annex 2 data is populated. You can upload your purchase register and it will say how much of that is matched, and it divides the match into various categories: weak match, strong match, exact match, and it will divide into categories. Not there in portal, not there in your purchase register. It will categorize and give it for you to take actions. So the department, the GST realized that this is definitely going to be an issue, and they said let's address all the issue, and here they have built a tool to do the matching. This tool is now available for download. It's a Java utility, you can download and do the testing of it. Let's understand the monthly returns. So I will give the comparatives of GSTR 1 and 3B. By now you all have familiar with the tables of GSTR 1. It's like it took 2 years for you to understand, okay, they used to the old returns, now they have become old. Now you know the table numbers of that, like you might not even know which table you sat last time, but now suddenly you will get to new table numbers you have to remember, right? So let's quick recap GSTR 1. Table 4 was B2B supplies, table 5 was B2C large, table 6 was exports, SEZ and the deemed exports, table 7 was B2C small, 8 was exempt, nil, non-taxable, table 9A was amendments to table 4, 5, 6, 9B was credit note, debit note, 9C was amendment to debit note, credit note, table 10 was amendment to table 7. Table 11 was on advances received, 11A was received, 11B is advances adjusted. These were the reporting tables for my turnover and the liability under GSTR 1. And it came to 3B. In 3B, I was reporting my liability in table 3, my input tax credit under table 4. Then the payment offset, everything was done in table 6. That's how my GSTR 3B and GSTR 1 life was. So the shelf life of this understanding is another 2 months. After that, you will have to now understand new returns. By the way, GSTR 1 is going to get scrapped from October. Will GSTR 1 be there in December, January, February next year? Yes. It will be there another 2 years. Till you file 1920 annual return. Because someone to file the 1920 annual return, you need the GSTR 1 and 3B. If they have not filed, they cannot remove it from the system saying that okay, it is not there. So it will be there for some more time and get scrapped. So the new returns there is a main return, then the annexure to main returns, ANX1, ANX2. Main return is auto-populated from the annexure and it has a tax payment mechanism. What are the annexures? ANX1, I have used the word outward, but the right word to use is liability. Before I get it uploaded, I will change it to liability. ANX1 is liability, ANX2 is your input tax credit. Let's understand the monthly returns, which is 3B equivalent. Table 1 and 2 is your basic information. Table 3 of GSTR 3B is liability, RET1, table 3 is liability. Table 4 of 3B is input tax credit, RET1, table 4 is input tax credit. Table 5 is TDS and TCS credits, which is otherwise like cash. Table 6 is computation of interest and late fee. Table 7 is payment of the taxes, so you will offset liability. Table 8 is claiming of a refund. If there is a balance in cash ledger, you can automatically report in your RET1 and claim it as refund. Equivalent to table 13 of GSTR 3, where you can report the excess balance in the cash ledger and claim the refund. So this is how your RET1 would look like. So you log in RET1, table 3 liability and table 4 is auto-populated. Next step, TDS, TCS credits, whatever you have accepted, it would be showing up. You will click next, interest is shown, the tax liability is offset, you will submit. Like you will hardly have any role to do a data entry in your new returns RET1. Let's understand these tables little deeper. Yes.
When you say refund, there is no carry forward, is it?
You have an option to claim a refund. You have an option to retain that money with the government for some more time and use it in next tax period.
Yeah, next month you can.
It's only a cash balance refund, not the credit ledger balance.
Okay. Sorry.
Table 1 and 2, we can skip basic information. Table 3, it is talking about turnover and the liability. Table 3 has been split into 4 subtables. 3A is liability on account of outward supplies. In fact, table 3 is more alike or ANX1 is more alike of GSTR 9, table 4 and 5 format. You will see a similarity in the words and other things. So table 3A is liability on account of outward supplies. 3B is liability on account of inward supplies. It is all document wise. 3C is the adjustments on account of debit notes, credit notes and advances. 3D is your non-taxable liability, non-taxable supplies, exempt, nil rated, outward supply where it is equivalent to 4B of GSTR1, where the recipient is liable for reverse charge, non-GST supplies, everything. So that is reported in your 3A. So total turnover and the liability is captured in table 3, RET1, table 3. Okay, I'll skip these tables because you are seeing everything as auto. Auto means from where is it coming? ANX1. So let's spend more time in ANX1. Any doubts so far?
What about
Advances is captured in your 3C. Details of debit notes, credit notes, advances, everything is captured in your 3C. So I will only focus on the red color. And very important, though it is everything is auto, here is what you should be knowing and spending time of. Imagine a situation, you have reported your liability in GSTR1. You have reported your sales in GSTR1. You have not paid the taxes in 3B. Now you have transited to new returns. New returns liability is computed from ANX1. A reported invoice, you can not report it again. So they have given you a facility to record a past liabilities. Liabilities relating to the period prior to the introduction of the current filing system or any other liability that needs to be paid. So manually you will be doing a data entry. So a liability of the past which is not paid, because now the liability filing is automatic, you will be doing a data entry of additional liability which you want to pay. Then comes 3B, inward supplies. So inward supplies, it is 9394 RCM. Then it is import of services. Is there any other inward supplies liable for taxes? It is import of services or 9394. So it is captured in your 3B. Then comes 3C. By the way, do you notice this? This is also auto. You don't do any data entry. Then comes debit note, credit notes, it is auto. Then user input for advances received and advances adjusted. Then there is another red mark.
Sir, that RCM you said everything auto.
Everything is auto. How? I'll explain. So everything is auto. System knows your reverse charge liability.
RCM is not auto.
RCM is also auto, sir. So you will do a data entry in your ANX1. That is why I said your return filing is nothing. Next submit. You will not do data entry in your returns. You will do data entry in your annexures. This red mark is important. This red mark is you have paid the taxes on advances. Now you are issuing an invoice in GSTR1. GSTR1 is gone off. You have entered a liability, you have recorded a sale in ANX1. Having recorded in ANX1, it is automatically coming into your RET1 as liability. So you will end up paying taxes again. So here is a provision where if you have already paid the taxes or you have forgot to report a supply in GSTR1, you reported in the 3B, you paid the taxes but you did not report in GSTR1. Now can I file GSTR1? It is not there, gone. So I will report it in my ANX1. When I report it in my ANX1, it is automatically getting reported as a liability. So since it is automatically getting it reported as a liability, it comes to your table 3A, liability is going up, you need to offset and bring it down. In 3C, you have a reduction of your liability. So it is equally important that you finalize your returns of GSTR 1, 3B books of accounts in the month of September, because you are doing transition to the new returns in October. So you need to know what are the corrections to be done in the September. September month is going to be a crucial month. If you have to do any corrections in your GSTR 1 and 3B, you would be doing in September month, so that your transition issues are less. Is this clear, everybody? Yes, ma'am.
This table would go away. What is the first return is filed?
Would this table will go away after first month? Answer is no. So this will continue, because you might not detect it in October or November. So they will give you some more window to ensure that you do the data entry. That is why they have retained at the last, so that when they remove also other table numbers will not get distracted. Okay. 3D, it is an outward supply which do not have a tax liability. That is why everything is user input. Yeah, right? So table 3 is your total liability. Coming to table 4. Table 4, input tax credit. 4A is a gross credit, 4B is reversal, 4C is a net credit, A minus B. For quarterly filers, there is an additional two tables, 4D and 4E. When I come to the quarterly, I will explain you. Same like GSTR 3B, 4A availed, 4B reversed, 4C net credit taken. 4A credits, even here you can see everything is written as auto, auto, auto. But this user entry red is important. You have a credit lying in 2A. You have not availed in GSTR 3B. There was a credit showing in the month of say July 2019, but you did not report it in 3B because for various reasons you didn't know, or the bill itself came to you now. How can it become a credit now? Because after uploading in 2A, it will not come into ANX2 again. ANX2 will only come from ANX1. So you should equally finalize like liability even the input tax credit. How much credit which is there in the books of accounts, how much credit which has come into your GSTR 2A, how much you have availed, how much you have not availed. And those credits which are there in 2A, you should go and check whether the counterparty filed the return, not filed the return. Because if he has filed the return, there is no chance of coming into 2A. It will come through ANX2 and you will take the credit. But if he has not filed the return, subsequently also your 2A may get amended. So right now I am discussing little bit advanced related discussions on the new returns. Once you get a flavor of the new returns, we would need half a day at least to discuss only what are the issues in implementation of the new returns, what are the various types of errors, how do you resolve it. But I want you to get that the transition return could be September, where you correct all these issues. So the red marks what you are seeing as the data entry is, if you skipped out the transition returns is what you will do the data entry here. Initially when the new returns came in, I was thinking that it is a wrong move that they have implemented in the September. Ideally they should have implemented in April. But how different it is between April and September. Even in the month of April, you will realize some transactions are missed out. Next year also you are correcting it. Next year also you are taking credit. While finalizing in GSTR 9 current year, you are reporting whatever is values which are missing in table 10, 11, 12, 13, so that everything is matching. So the carryover issue will be there even between the years or in between the years. Right, so it hardly actually makes any difference whether the returns coming in September month or the next financial year. Only thing is, in 1920 while you are filing annual returns, you need to club GSTR 1, ANX1, you have to do little more work. By then you would have become expert, so it's all taken care of. Then 4A, the reverse charge credits. is auto. Reverse charge liability is auto, reverse charge credit is also auto. Then provisional input tax credit on documents not uploaded by the supplier. So earlier we have seen the transitional credit which is missing. Now here is a provisional credit. You should also know in which table you are reporting the missing credit. There you are reporting a transition credit, which means that it exists in 2A but you did not take it. It's a carry forward credits. Other way saying, table 13 of GSTR 9, whatever you are reporting for which tax period is what you are reporting there. Here in the current month I have made the purchases, but it is not there in my Annex 2. So the provisional credit which you are taking on the documents not uploaded by the supplier. Supplier has not uploaded the documents, you want to take the credit, the 20% credit which government has given you, take it. So if someone has not uploaded some working capital benefit I am giving. So that's the credit you would be reporting here. Upward adjustment of the input tax credit due to recipient of the receipt of credit notes and other adjustments and reclaims. So if something which is reversed and you are making a reclaim, those credits you are doing the entry here. So there are 3 user entry for credits. You should know in which data field you have to do the data entry, because today the notices are issued for various things, and for all practical we know that it is not the officer who has issued the notice. You prepare a reply and go to him, is like he would be surprised, may not tell you, oh is it I have issued the notice. Because there is a system, it does some magic. If the logic is not matching to that its thing, it will automatically send a notice by SMS, by email, everything, right? So they know what is the value of the credits which come under which section, and they will wait for the tax periods to adjust all those things. If it is not taken care, then you will automatically get a notice.
But what is the upward adjustment on receipt of credit note?
Okay, this is on the credits which you are reversing when you are unlocking and reversing it, or when a credit note is being issued. The credit, your input tax credit generally reduces. Now, those credit notes and the invoices which have been rejected and that have been amended, modified by the supplier, which is now coming back for you to make an adjustment, those are the adjustments which you are reclaiming it. It could be any of those adjustments which you are manually doing it has been recorded here. So the detailed illustrations we have to give it, and classic example you can think of is your 16.4 not paid to the suppliers, with 16.2 the proviso not paid to the suppliers, where you are reversing it and again taking it. So those adjustments is what you will report it suo moto and take the credit. Then reversal of the credit. One reversal is credit on a document which have been accepted in the previous return but rejected in the current tax period. Like I said, there will be a facility which is given for you to unlock an invoice. Once you unlock an invoice, the credit would be reversed for you. And that credit you can reclaim in 4A manually. Or if it is a user input which is there in the B3, you have taken a credit here under provisional credit. I have not uploaded it, you have taken the credit provisionally. Next month when I have uploaded, it has travelled to your Annex 2, then automatically travelled to your return, it automatically added into your credit. That credit you have to again manually reverse it. So the credits which you have availed and automatically now coming up, one time you have taken, the other time system has given you the credit. These credits you have to manually reverse it. Like those you have availed which the supplier has uploaded subsequently, you would have to reverse those credits manually. Then other reversal, rule 37, 39, 42, 43 reversals. Apart from this, if you still want to contribute to the nation building and reverse some credits, there are any other reason you want to reverse the credit, there is also provision to reverse the credit. 4C is your net input tax credit available. This is all about your credits in the monthly return filers. I'll come to 4D and 4E little later. 5 we said TDS and DCS credits. 6 is the interest computation. The first portion, which is 6.1, is an auto computation by the system, where the late fee or the interest due to late reporting or late filing, system will automatically calculate the interest. Rest of the interest you have to manually report, and they have given 3 other reasons. So if it is on account of input tax credit or input or in account of reverse charge or any other reason you would like to make the payment of interest, you would make the payment of interest under table 6. Table 7 is payment of the taxes. So tax payable on account of reverse charge and other than reverse charge is available to you. There are 2 new columns which have come. Compared to your GSTR 3B, it doesn't exist. Column 5, tax already paid if any. Adjustment of negative liability of the previous tax period, which is not there in your GSTR 3B, it has come here. Then how much of it is paid through cash and paid through ITC. So let's understand these new 2 columns which have come in. The tax payable is known, tax paid is known. What is tax already paid if any? Anyone can give any example? Quarterly returns, okay. Advances, wrong answer. PMT 08. Okay. So I have said there is a concept of amendment returns. Right? My turnover is 1 lakh. Tax liability say 18,000. Erroneously I reported the turnover as 10 lakhs and the tax liability as 1,80,000. And there was a credit balance, I have paid it off. I have used an amendment return and changed the turnover from 10 lakhs to 1 lakh and liability from 1,80,000 to 18,000. How much is my liability? 18,000. How much I have paid? 1,80,000. So 1,62,000 tax has already been paid off. So when I filed my amendment return, my tax liability went down. So there is some taxes which have already been paid off, which has been accounted for. So those taxes which have been paid off or accounted for would automatically travel in to your column 5 because you have already paid those taxes extra. Swap the situation. My turnover is 10 lakhs and the liability is 1,80,000. Reported as 1,18,000. Now I am correcting it through amendment return. In my amendment return, 1 lakh I will make it to 1,80,000, 10 lakhs and 18,000 I will make it to 1,80,000. What happens to that liability? That liability is not the column 6. So there is another return called RET 1A. So if I have to pay some liability, I cannot file a return without payment of that liability. But if I have excess paid that liability, it will be available for utilization in next tax period. Alright? Now let's understand then what is column 6. If that is not what is column 6, column 6 is this quarterly tax filers. People who are filing on a quarterly basis, basically this table is same for RET1, RET2, RET3. A quarterly tax filer is filing the returns on a quarterly basis. When does he make the payment of tax? For him, monthly. If you remember in the slide, initial slide, the transition, I have shown something called PMT08 for the small filers. In the month of October, they will be filing a payment challan. I don't know whether I have to call it as a return or a challan, because you can call it as a glorified challan. So it has your liability, it also has an input tax credit and the balance tax payable, and you will say, okay, pay it through cash. So first month I have reported my turnover as X. Second month I have reported my turnover as Y. I have paid some taxes to the government on account. Ad hoc basis I have paid, I have reported, I have made some payment of taxes. Now, third month I will be filing my RET1. When I am filing my RET1, I have reported all my liability in my ANX1. Basis my ANX1, my RET1 liability got auto-populated. That is now reported in your column 3 or column 4 of your table 7. But some of it I have already paid for. Like every month, the first 2 months I have already paid for. The taxes I have paid. So those taxes which will be available, the taxes which have already been paid for would also be available for adjustment. So government will adjust the taxes which have already paid for the quarterly filers and report it. So that is where you have table 5 and column 5 and column 6. After that, so the order of adjustment is whatever is the liability which is there, the earlier period extra liability or extra taxes paid would be adjusted, and the balance amount would be computed for the current adjustment of the ITC and the cash payment for the current month. Even this you need not do, system will do. What you have to do, click that next button. Yes.
Ad hoc taxes that I am paying, won't that be available in the cash ledger?
It would be moved out from the cash ledger and goes to the government kitty. If balance is there in cash ledger, you have not paid the taxes.
So that would be available.
Yes.
Another thing, ITC from the reverse charge that I am paying, where is that available? Because ANX1, I am showing tax payable on the...
We haven't discussed ANX1.
So this why it's referred as the previous tax period. Negative liability of previous tax period.
If it is of current month, that correction I have done in the current month. Earlier I reported as 10 lakhs and 1,80,000, now correcting it to 1,18,000.
Previous quarter.
Previous month, previous quarter. Yeah? Okay. Then I have an option to claim refund if there is any cash balance in my cash ledger. The last table I will report that so much money, transfer it to my bank account, it gets transferred. Right? As usual you have the declaration. Now here in your declaration, if you notice carefully, you are giving information in form ANX1 and form ANX2. So in one go you are submitting RET1, ANX1, ANX2. Earlier this verification form exists for GSTR1. It would no longer exist for ANX1 because you are not filing ANX1. ANX1 is a statement which is getting filed along with RET1. Right? So you are giving the declaration for ANX1 and ANX2 in your RET1. Okay. We looked at this question. Let's go to my ANX1. It is both outward supply and the other liability. I have given a comparison of ANX1 with old format. So this slide would be available, so you can go through it later. It's complicated to remember these table numbers. Let's understand ANX1. ANX1 has 4 tables. 1 and 2 is basic information. Table 3 is capturing your liability. Table 4 is an additional reporting information. It reports out of the total supplies if there is any supplies through e-commerce. Again, Amended Act 2018, it said in section 52, they have brought in this matching concept that all supplies made through e-commerce operator would also be now put to matching, because the TCS credits which you are going to take, like 2A and 3B credits which you are taking, the TCS credits, the GST equivalent return which they are filing, GSTR 8 is now matched with the supplies you are going to declare as how much of it is your outward supplies. So what is there in my table 3? Table 3 captures both outward liability and inward liability. So table 3 is capturing both my outward liability and inward liability. 3A to 3G is outward related. 3H to 3L is inward related. It is invoice wise, line item wise, you would be reporting it. Let's understand it. 3A is all your B2C outward supplies. 3B, B2B outward supplies. 3C, exports with payment of taxes. 3D, exports without payment of taxes. 3E, SEZ supplies with payment of taxes. 3F, SEZ supplies without payment of taxes. 3G, deemed exports. Is there any other turnover which we have missed out, which we were otherwise reporting in GST Urban? Nil rated, exempted, non-GST, directly we enter in table 3 of RET1, 3D. Advances is again directly user entry in 3C of RET1.
That is invoice level, it is not required.
Invoice level not required.
Deemed export.
Deemed exports is there in your 3G.
Amendments.
Amendments. Amendments under the new return concept, supplier has to unlock it, you can change it. It is like your ANX1, there is a line item. Before you submit RET1, I have made a supply to you. There is a continuous upload facility, I have uploaded. There is an error in it. Can I correct it before I file my RET1 ANX1?
Yes.
Yes, because that is just a data entry which is there. If I file it, how can I correct it? You will unlock it. It will automatically be available for my editing. I will again edit it and submit it.
Supplier has to unlock.
Recipient has to unlock. Recipient has to unlock. So amendments is taken care by direct data entry in the regular tables itself. Is there anything we missed?
Can you unlock it?
Pardon me, sir?
Supplier has made a mistake. How can you correct it?
Recipient has accepted.
Yes.
So recipient has to unlock it. The moment he unlocks, his credit would get reversed. Supplier can edit it.
Exports under rebate claim.
Exports without payment of tax.
Actually, you are paying the tax.
So you have exports with pay and without pay. With pay is under 3C, without pay is under 3D.
Okay, with pay means you are not charging on the invoice, but
No, you are paying the taxes, then claiming it as a refund. Both under with pay, without pay, you are not collecting from the customer. Under with pay, you will take the refund of the taxes. Under without pay, you will be taking refund of the input tax credit. Any other thing which is missing? There is one thing which is missing when you compare with GST. I report it in GSTR1, but I am not reporting it in table 3 of ANX1. No, turnover, I am talking about my supplies. Debit notes, credit notes is there here under like line items. It is a document upload. Like you issued a debit note to a registered person, you will directly enter in 3B. Debit note, credit note, you will in the respective tables you will do a data entry. It is not like a invoices. This is debit notes, credit notes, invoices. Everything you will be doing the data entry. HSN, I am talking about invoice reporting. You are doing a reporting of invoices, but you are not reporting invoices here. Segregation of B2C large, B2C, okay. I understand B2C large invoice was getting reported. Now not required, everything is a single invoice. Valid point. One more thing.
Outward supply on which reverse charges?
Yes. Outward supplies on which the recipient is liable to pay taxes under reverse charge. 4B of GSTR1. I was doing an invoice-wise reporting. I will no longer do a data entry. If I am a GTA, I am an advocate, all my outward supplies recipient has to pay. Earlier I had an obligation to do an invoice-wise reporting. Now that invoice-wise reporting has gone off, I need not do any data entry of it. I will do a consolidated reporting. Recipient will now do a data entry. Now we'll move to the inward side. So someone was asking, you are asking how RET1 input tax credit and output tax credit and reverse charge is auto-populated. Here in my ANX1, I will do a data entry of my liability. What do I do? Inward RCM. What type of RCM? Both 93, 94. Is 94 still there? Yes, no, maybe? 94 completely taken out? 9 subsection for purchases from an unregistered person. Do I still need to pay tax? From 13th October it has been taken out. I thought they brought it back, no, again? No. Okay. There's one category of the SSCs, it has come back with a new HSN code with a new entry 452Q. Real estate sector, where the purchases more than 80% should be registered person. If it is shortfall to that extent, you have a 9(4) tax liability. Okay. 3H is inward RCM, both 9(3) and 9(4). 3I is import of services. 3J is import of goods. 3K is imports from SEZ. Here comes 3L, missing tax invoices. So you will wait for 2 tax periods. If the invoices are not uploaded, you will report it under 3L. 3L is only reporting. It is not a credit. Likewise, 3J and 3K, you will only do the reporting. It will not add it to your liability, because you would have already paid the IGST when you are importing the goods while filing your bill of entry. You have paid the IGST on imports to the customs authority. So you will report the line items here. The credit would automatically flow to your ANX2 and your input tax credit ledger, but it will not create a liability in your RET1 table 3 for your 3J and 3K. It might like sound little mathematical, but when you put the numbers, you will understand. What is the structure of reporting? How do I report this? GSTN wise, it has to be reported. Wherever GSTN is not there, unique identity number. Place of supply has to be mentioned. Then the document details. There is a column called document type, which was not there earlier. Earlier it was invoice number, date and the value. Now it is document type, whether it is invoice, credit note, debit note. Then the HSN code. The HSN code expectation is up to 5 crores, no need to report. Beyond 5 crores, you have to report 6 digits of HSN. Tax rate, percentage, taxable value, tax amount and the shipping bill details is what you will be reporting. Total 15 columns. Some notes.
That subject to RCM, that is what we will remove.
Subject to RCM is removed. So, registered person can upload the details of the documents at any time during a month or a quarter. So he can keep on uploading the documents till when he can upload, not later than the annual return or the September, whichever is earlier. Next, a monthly filer cannot do a data entry in ANX1 between 18th to 20th. 18, 19, 20, you did not fill ANX1, suddenly you want to fill ANX1, you cannot. You will have to do it only on 21st, then file your RET1 and contribute something back to the nation by paying late fees. Similarly, quarterly filers 23rd, 24th, 25th, you would not be able to do any data entry in ANX1. It's only you will be filing your monthly returns only in those 3 periods, RET 1 to 3 or in 18, 19, 20 monthly filers RET 1 you will be filing. You cannot do any data entry.
Sir, how would it work?
How?
Quarterly filer files the ANX pertaining to a monthly filer. What happens?
He can file, but his data entry in ANX
Up to 10th only. Okay, sorry, yes.
Okay. So viewing and accepting by the recipient, it is uploaded by the supplier, visible on a real-time basis till 10th. The action can be taken only from 11th. So till 10th I cannot act for rejecting. Keeping it pending rejection is only after 11th, and till 10th it is only view. And the tax liability, the month in which it is reported, it will get added to the tax liability. So if you look at these columns, you will see GSTN, place of supply. Under the document details you have type of document, number, date and value. The HSN code is reported. Earlier the HSN code is reported under table 12. The summary of all my outward supplies is reported. Now the HSN code is reported at invoice line item. Tax rate, taxable value, tax amount is reported at line item. So your ANX 1 has become detailed. GSTR 1 was not having the type of document, it was not having the HSN code. Both are the two new entries which have come in. Place of supply was the last column, but they brought in the front with the prominence. They want you to do the entry of the place of supply. For 3A, supplies made to the consumers, you will do a bulk data entry. You will not report invoice wise, it is bulk data entry. Bulk data entry, place of supply wise, rate wise. HSN need not be entered for unregistered persons. If you enter HSN for unregistered person, then it becomes a complicated matrix, because it is HSN wise, rate wise and state wise. So for B2C it is just state wise and rate wise. For all other line items, wherever you are doing an invoice entry, HSN has to be entered. It's a 6-digit HSN. So all the tables are here. So out of the total tables above, in table 4 you will report how much of the supplies are made through e-commerce operator. It is again an additional reporting information. Let's go into some notes of it. In 3A B2C supplies, you will be making a supplies to unregistered person. HSN is not required to be reported under this table. You will be reporting net of debit note and credit note. When it comes to the B2B, it is all B2B supplies. So if there is a supply from SCZ to DTA, if an SCZ is supplying to the DTA, in case of goods, the person who is buying from an SCZ, he is filing the D bond and he is paying the IGST. So it is like import of goods for him. So it need not be reported here. But in case of services, SCZ has to report this as a supply and it has to report it as a supply under B2B. When a supply is made from a DTA to SCZ, there is a separate entry, supply to an SCZ with or without pay, so it need not be entered under this section. The invoice value and taxable value is here. The tax amount is auto computed by the system. Earlier under GSTR1 we had an option of, after auto computation, editing the taxable tax rate, tax amount. Now tax amount cannot be edited, it only has to be, you key in the taxable value and tax rate. Most of us wouldn't know that, okay, after entering the tax rate, the tax amount which is calculated, it could be amended, but later they have locked the system. Now under the new returns they said The tax amount will be calculated by the system itself. You cannot do any changes in the tax amount. When it comes to the exports, 3C and 3D with payment or without payment, the only point is shipping bill might not be known at the time of filing my ANX 1. I would have sent it to my CHA, it might get cleared whenever it gets cleared. So the option of updating my shipping bill number is available under a separate data entry format at a later point of time. Same goes with the SEZ supplies also. So you will be reporting all the SEZ supplies here. Then 3G, which is deemed exports. Under deemed exports, generally the supplier or the recipient, deemed exports is like exports with payment of taxes. You will have to pay the taxes and claim it the refund from the government. You will not get the taxes from the recipient. Or if the recipient is paying the taxes to you, recipient has an option to claim the taxes from the government. So in case of a deemed export, you have to mark who is claiming the refund. Is it the recipient or is it the supplier? Then comes inward supplies liable for reverse charge, which is 3H. Very important table. Inward supplies liable for reverse charge. You will have to report all 9(3) supplies and 9(4). Like all those GTAs who have issued the invoice, you will now have to do a data entry invoice wise, which is the additional burden which has come. Invoice wise you would be doing a reporting. If you are making a purchases from an unregistered persons, they said they have also given an option of reporting it at PAN level. Even at a PAN level, you may be able to report the values under this section. Even if you have paid an advance to an unregistered person, the liability is again on the person making an payment to an unregistered person. The time of supply under section 12 and 13 is on payment itself. So you would have to make the payment of taxes. So you would include all the liabilities under 3H. Import of services, 3I, you will be reporting all the import of services line wise and reporting it. Import of goods, again you would be each bill of entry wise, you will be reporting under 3J. Government is So government is working on the data from IceGate portal to auto-populate. Maybe in 2 months, NSDL is working for the SEZ portal. So maybe in 2-3 months after implementation of this new portals, they are also doing the pilot for the data getting fetched. Currently till such point you will be doing a data entry of all import of goods and imports from SEZ in your ANX 1. Once you report it, it is automatically available as a credit in your ANX 2. Once the data flowing automatically happens from IceGate portal or from the SEZ, then it would be moving out from your ANX 1 and directly gets reported into your ANX 2, both import of goods and import from SEZ. Then comes missing tax invoice, which is 3L, reporting of this missing tax invoice. So recipient would have to provide invoice wise. Please note, recipient has to provide invoice wise. If the supply, a credit which has been claimed, but the supplies are not yet uploaded by the supplier. I have taken a credit on a provisional basis and the supplier has not uploaded after 2 tax periods. In case of monthly return filers, after a lapse of 2 tax periods. In case of a quarterly return filers, after a tax of 1 tax period. So an example, supplier who has not uploaded in the ANX 1 of April, May or June, then you will be reporting it in July. You have taken the credit in April, so you will wait for May and June and you will report it in July for it to report here saying that so much suppliers have not uploaded in the missing tax invoices.
So then I have to reverse my credit also if I'm reporting and
Yeah, so if I am reporting here, should I have to reverse the credit? Answer is, I don't know. You can choose to reverse the credit. As of now, this document doesn't say that you are not eligible for the credit. Like you have paid, you have valid invoice, again disputes, court of law, everything. So you will only reverse those which is appearing. Because you have already taken, appearing again it is coming, you have to reverse it.
But I
No.
think but it is not approved, supplier is not approved.
It document doesn't say that you should reverse.
No, because we are adding it in the missing, like
Yeah,
my supplier has not uploaded.
correct.
I have added that invoice,
Yeah.
and then after 2 months still he has not filed the return, only those cases or
Yeah, those cases where you have taken a credit and he has not done that, only that you will be reporting
he
it
has
here.
not taken any action, not filed any
Correct.
returns.
That is what you will be reporting. Then editing of the invoices by the supplier. So the credits always flow to the recipient basis the documents uploaded. Once the document is uploaded, it is logged, the credit is taken. The recipient has to reject it. So till 10th of next month, supplier can keep correcting it. He made an entry, it is an error, he can keep correcting it. After 10th, the recipient has to necessarily unlock that invoice, because by default the invoice gets locked. So the recipient has to unlock it, only then the supplier can edit it. Otherwise he cannot edit any document. The intimation to the supplier. If I reject any invoice, it is intimated back to the supplier, so there is a separate viewing window. Uploaded by the recipient, rejected by the recipient, uploaded by the supplier. So under rejected by the recipient, you will be seeing those line items. You again have time till next year September or filing of annual return, whichever is earlier, to take an action of this. Moving on to ANX 2.
Only for this rejection there will be a
Editing, rejection, inserting everything till September of the next financial year.
no. Do we get any pop-up or
Do we get any pop-up? No, when you do
So
the
how
data
will I-
entry,
how will
you
I-
have
whether he has unlocked or not?
you have a section uploaded by the recipient, rejected by the recipient. You will be when you click on the tab, you will see the list of documents if someone has rejected it.
No, I'm asking about this unlock. If he has unlocked, practically they will say, no, we have unlocked.
So the moment he has unlocked, he has rejected the invoice, so it would be available in the supplier, rejected by the recipient section.
It will come in rejection.
Yes. Any doubts on ANX 1 before I move to ANX 2? No, I know your energy levels are going down. Okay. ANX 2, very simple document. Do you have anything to do in it other than doing nothing? You have at max the last column, action ARP, accept, reject, mark it as pending. You have another action. What is that? Do nothing. It is deemed accepted.
Government.
Right. So it will automatically show all my ANX 1 data entry here. But one important point which I want to notice here is the table of which form of ANX 1 it is reported. Next, what is the date of uploading? When is the supplier reporting in his ANX 1? Did he report on 9th or it is 11th? Like why is it moving to a different ANX 2? So when did he make the supply? You know the document date and the document upload date also. So you can start noticing the errant suppliers. So all your vendors who are making supplies to you but not uploading on time, you will be able to notice from here. Then whether they have filed the return or not is also visible here. Then the additional column here is ARP, accept, reject, pending. So there are 15 columns there, you have additional 3 columns here as your information. So whatever the action you have taken is shown automatically in table 4. If you have rejected, it will come in rejected. If you have marked as pending, it will come in the second section marked as pending. Then whatever is the balance, it will be shown as accepted. By default, we don't do anything, it will automatically come in the accepted section. So it is, everything is auto drafted, you don't need to do any data entry in Annex 2. ISD, credits received from ISD. Earlier, all the credits of ISD has an obligation to transfer the total credits, eligible as eligible, ineligible as ineligible. Here now eligible credits would travel to table 5 and it will show so much credits of ISD has come which are eligible for you. So you need not bring in all the credits and reverse the ineligible credits. Only eligible credits are traveling to your RET. So that is all about your RET1, ANX1, ANX2. Any doubts to anyone? Yes.
Sir, how many months we can keep the invoice pending?
Till September of next financial year. Anything till September of next financial year. Or filing of annual returns, whichever is earlier.
What will happen after September with the pending invoice?
It's gone to the government. Supplier filed the liability, your credit has also gone. Okay. Now let's move to the quarterly filers. In case of a quarterly filers, apart from filing of the returns, they have a form called GST PMT 08, payment of self-assessed tax. Is it a return? Definitely no. Is it a tax challan? That is PMT 06 was there. So what is it? This is a glorified challan. So what does it do? It asks for what is your summary of your liability which you need to pay. It is like equivalent to your GST or 3B now. Put in a condensed form. What is your liability other than reverse charge? Liability on account of reverse charge, because reverse charge need to necessarily be paid by cash. You cannot use input tax credit. Then how much is your input tax credit? Information is captured in your table 3. Basis this information, your challan gets generated, tax payment challan for offsetting how much of the liability which you are now paying. The payment of tax columns are same RET1, RET2, RET3, PMT. So the same columns are visible. This time they are maintained the same standard. If you have paid extra, that can be adjusted. If there is a negative liability of the tax periods earlier, it can also be adjusted here. And you will be making the payment through cash and through ITC. There is a verification form. So you have to give a declaration. So this is like a mix. Like in a return how you have a verification form, even here you have a verification form. So a quarterly filer will file PMT 08 for the first 2 months. Third month he will be filing RET 01, 02, 03 appropriate form. Monthly filer he will be filing ANX1, ANX2 and RET1. In other words, he will only file RET1. ANX1, ANX2 is only an annexure which goes along with it.
This is only for the quarterly.
PMT 08 is only for quarterly filers, because government wants the collection for first 2 months. So the first 2 months the quarterly filers will file PMT 08. The last month they will be filing RET 01. Anyone has any doubts? Due dates for PMT 08 would be maybe 20th. As of now, see, nothing has been released. That is why it's still said it is proposed. So the forms are not notified, the due dates are not notified. Looking at the forms, we will say that the quarterly filers will file on 25th. But officially there is no document which says that these are the due dates, needs to be paid on this date, all those things.
In that case, effectively even quarterly filers are doing all this monthly.
Monthly filing, monthly basis. So better file a monthly.
So this RET one.
At least you have an option to file missing tax provisional credit, which is not there in the RET2 and RET3.
So this RET1 when you are filing, is challan is generated again?
RET1 when you are filing, no. See, payment you will do a PMT06,
So
then balance in your cash ledger. In your RET1, the balance in cash ledger is drawn and offset. If there is no balance in this cash ledger, it will say, can I generate a challan for you? You will say yes. It will only prepare a challan, and they are also exploring that the GST Act permits the payment of taxes through credit cards. So in the new returns, they are looking at integration with the debit card and credit card. So everything is next, like they want everything as next, submit. So it will do everything for yourself. Okay. Clear on the quarterly filers? Any doubts? Okay, I have a doubt. Quarterly filer, assuming my turnover is say 1 lakh, let's take a simple example. My purchases is 60,000, my sales 1 lakh. 1 lakh my sales, 60,000 purchases. Let's keep a tax rate of 5% for the ease of calculation. 5,000 output tax liability, 3,000 input tax credit. How much cash I have to pay every month? 2,000. First month, how much I will pay? How much I will pay? 2,000 rupees. 5,000 or 2,000? I will show 5,000 there. Input tax credit availed 3,000. Correct? I will pay how much? 2,000. Second month, 2,000. Third month when it comes, what am I filing? RET 1. Liability for RET 1, where will it come? ANX 1. In ANX 1, how much I will declare as my liability?
15,000.
I will enter 15,000. Alright, I will enter 3 lakhs and 5% 15,000. Now when I go to making payment of taxes, will I pay 15,000? Why no? I have already paid. So taxes already paid, if any, I will adjust it. Taxes already paid, if any, I will adjust it. Now how much I have to pay? 2,000. What will be coming in the column 3? Other than reverse charge column 4, how much value it will come?
15,000.
Tax payable, how much it will come? 15,000. Already paid, if any, how much it will be? 4,000. Balance? Balance paid through ITC. Balance paid through ITC, how will it come? Is there a balance in electronic credit ledger? When I am filing my PMT08, I am only making payment of taxes. Well, the value reported in my PMT08 in column 3, will it be added to my credit ledger? No.
Should be tax.
My credits would come from ANX2. So the way they have done is, it will be added to credit ledger marked as provisional. In fact, if you now log into the system, you will see provisional credit, eligible credit, the section. So it would be marked as provisional. What if the supplier did not upload the details in Annex 1? Ideally, I should have got 60,000 into 5%, 3,000 into 3, 9,000 credit should have been available in my Annex 2. My Annex 2 hypothetically is showing 0. So RET1 liability is how much? 15,000. RET2 credit is how much? 0. So credit is 0. Some issue, let's see with this one thing. This is better. So my credit is 0. Liability is showing 15,000. So that is where I have skipped some slides in my RET1. I said it is useful in the quarterly taxpayers. So column table 4D of your RET1, a quarterly filer who has taken more credit than whatever is there in Annex 2, table 4D of RET1, I will be discharging I will be reversing that credit. It's like it is an additional credit which would be coming. Let me show you now the RET1 table 4. Yeah. So the ITC which has been declared during first 2 months. So the first month and second month is reduced from my input tax credit. What is my eligible input tax credit is say out of 9,000, 5,000 would have got uploaded, entire 9,000 would have got uploaded which I have taken as a provisional credit. So whatever I have taken is reduced. If my credit is 0, what I have taken is 9,000, it is reduced. So then automatically the liability gets created. The net ITC available is what it would be showing here. So this would appear for first month and second month for the quarterly filers. Is that clear? Alright, so I have come to the end of the session. What should you do for moving on to the new returns? What is that you should do? First and foremost thing, your September returns needs to be finalized. Because from October you are moving into the new returns. September returns needs to be finalized for what? Liabilities, input tax credit. Both liabilities and input tax credit. So why liabilities? You might have some unreported liabilities. You have some credit notes to be adjusted. There is an opening liability in GSTR 9 of 2018-19. 17-18 file madilla. 18-19. You would report something as that, okay, I have paid taxes in 19-20. Like table 10 of GSTR 9. So this is an opening liability. So there is a mismatch between GSTR 1, 3B and the books. You have to even out in your September return so that you take care of all those things. Likewise, the input tax credit. Credits which you have availed but not there in 2A. Credits in 2A but you have not availed. You have to track all of them because this will not, system will not know whether you have taken action or not. It will not travel to the new returns. To the new returns, none of your past data will travel. So a very important thing you should be doing a tracking of missing returns in GSTR 1 and 3B. What is the action you should be doing on a regular basis? Someone said, what do I have to do? On a monthly basis, I have to do firefighting with the supplier. So you need to deploy a software. You should start now using a software for filing the returns or the reconciliation, which will help to do this 2A matching. It is an inevitable evil because the credits are now coming from your 2A, which is equivalent to Annex 2. Annex 2 is becoming your credits. So from books of accounts, you should know how much of the credit which is there in your books of accounts. In fact, in an ideal way, if you have to know, your credits are segregated into 3 categories. How much of the credit which is there in Annex 1 and Annex 2 and available to me. There is a credit in Annex 2 but not available to me. Possible? How? Missing?
Pending actions.
No, not pending action. It is there in my ANX 2 but not available to me.
Not yet accounted, not yet filed.
Who's not received? Which is cancelled.
No.
It was wrongly uploaded by this.
Okay. I have uploaded my ANX 1 on 9th. Will it be there in your ANX 2? Uploaded on 11th. Will it be there in your ANX 2? It will be there, but it will be there in a different ANX 2. So when you are doing your reconciliation, you should download all ANX 2s and reconcile. Though it exists in an ANX 2, like 2A is a document which keeps changing. Today you download a 2A, there would be a different value. Tomorrow when you do, it will be a different value. But ANX 2 after 10th it is frozen. There is no entry coming in ANX 2. For example, you have purchased goods from me in the month of July. I did not file my July returns. I filed my July returns in October. This credit will not be there in your ANX 2 of July, it will be there in ANX 2 of October. Like the month when I upload, it will get reported. So after 10th, there will not be any entries into your ANX 2. Any entry coming in, it will be going to the next month ANX 2. So your entries which are there in ANX 2, there is a credit in my books, so I have to see, okay, so much of the credit I will be eligible in the next month to take. Then comes balance credit, which is missing credits. What do I do with the missing credit? I avail it on a provisional basis. Now, provisionally how much I will take? I will only take 20%. Now this provisionally availed credit 20%, I will now have to travel in the next month, next 2 months, is it there in my ANX 2? If it is there in my ANX 2, I have to reverse the 20%. If it is not there in my ANX 2, then in the 3rd month, after 2 tax periods, in the 3rd month, I will report it in my ANX 1 3L. How much I will report? 100%, because I am reporting the tax invoice. Reporting in 3L has no impact in your returns. So you have a bigger issue of credits in books and this 2A and matching of unmatched credits. Yes sir.
So this Annex 1, ANX 1 rejections which get corrected the next month, it will go into the next month only.
Yes. ANX 1 rejections which are corrected, the month in which it is corrected, it will go to that month ANX 2. Like 2A, ANX 2 is not a revolving line item, it is going to be static. So your ANX 2 downloaded now, 10 years later it will be the same, 10 days later it will be same. You will not find a new entries in ANX 2 after 10. So which means it will need a lot of system integration. So you have to configure your accounting applications smoothly so that it helps you. Your ANX 1, you saw there are new data entry, new line items, so that needs to get in. ANX 2 reconciliation needs to happen, and e-invoicing is a new concept which is coming up, where across India any invoice which has been issued will have a single language. The software will have a single language which will communicate. So this e-invoicing will take care of most of the integrations and the reporting. The draft format is already there in the public domain for review and comments. Most probably from effective January, the e-invoice standards would be going to come into picture. Yes sir, you have a question.
Let's say my softwares have filed July invoices, their ANX 1, which was supposed to be filed in July in multiple months. So there is no way I can find all my purchases in one single ANX 2.
Combined all ANX 2.
Then again sort it with the date of invoice. That's the only way.
So government has given a tool to do all this integration, verification. That's what the IT offline tools issued by the GST has issued this offline tool. It's available, you can download it and you can also do a testing of it. Yeah. So clear? Anyone, any doubts? Alright. So given that there are no doubts, so I would close my session giving a thank you. I know it is a dry subject, new subject, and I expected that you will have a chance. Thank you. And if you have any questions, I'm open.
So before we conclude, starting when I told like whether it would be simplified returns for taxpayers or government, so what is your opinion? Government. At the end of the day, so whether it is for government or taxpayers, we don't have any options, but we need to follow it when it comes into live. So thank you so much Venugopal sir for giving in-depth analysis of new simplified returns, and you made it really simplified. So hope everyone has got benefited. So please give a big round of applause. So on behalf of Bangalore branch, I request CA Venugopal sir to please hand over to memento to the speaker.
Thank you very much.
And last but not the least, thank you so much for your patience listening. So please do come for flag hosting and be part of Independence Day celebrations and a couple of seminars which is upcoming. So for more information, you can log into our website, Bangalore branch, and also Android app, Bangalore ICI. So thank you so much, and this material will be available under our website as well as in mobile app. Thank you.